Right, today is the 14th of July, 2026, and the market's live right now. And it looks like it wants to go up. The only thing that's keeping me out of this one right now is because I normally would try to buy the break above that high right there. This is the opening range breakout, 15-minute. But right here is what I call the spaghetti mess, and that's when the the DMI is all just going back and forth, twisted up. See, here's where there's big spread, even though that was a news area. That's what I'm looking for. Earlier this morning, I did have one trade, and I probably should have just taken below the ORB but the only thing is that wasn't, well, yeah, it was. It was right there. Uh, when that candle broke, the RSI was below the 50, and the DMI was right here, getting ready to spread apart. I waited until I believe it was right in here. It was around 50 on the 1 minute chart. It gave me a much clearer sell order, which I did. The only thing I was concerned about was this line right here, which is the VWAP, and I know trading into a VWAP is pretty risky sometimes, but there was a lot of downward momentum, so I went ahead and took it and I only took one micro, so I made 60 bucks, no big deal, but a win's a win. So what I'm waiting on right now is this thing to pick a direction, and here's the CDV, cumulative delta volume, and it's showing green, so that means more at the market buyers than at the market sellers at this point, so it should be driving the market up. And I'll wait for that break above here. In fact, I'll just put in an alert right now, and when it dings, I will start looking for the break. It'd really be nice to break above this high here, and then just have one 5-minute candle pullback, which would be a red candle, or at least a close below the high that it just made, and then I would get in above the high of it, and my stop would be below the red candle it just made. So that's my reasoning right now, and we'll see what happens. Also, here's another reference I want to make. I like, this is the ES and here's the NQ. I like for both of them be doing the same thing at the same time. And does that make sense? I don't know. But anyway, which this one was breaking down the NQ, and the ES was showing it was breaking down also at that point. But if this is going, if this market's going up and this one's going down, I like to step aside and wait till they start getting in sync again. So I just wanted to throw that in there. These are my trading notes. I go back and watch these videos, and it kind of reinforces the type of trading I'm doing, especially when I make the wins. So it helps me a lot. All right, so here's what happened. I did the red candle above the red candle, and I didn't wait for it to completely go against me here. I got out because this actually high right here kicked me in, and I took a stop out, and I was down, I think, about 200 bucks, and then I got in. Everything was looking real bullish at the time, so I got in again above this doji, and I was up about 200. I was positive. I can't remember now. But I was $200 in the positive after my loss, so I'd made back 400 bucks, and I just got greedy. I thought it was going to go on up to at least 900, and I didn't. I took out a couple down here, but I ended up being down about 80 bucks right now. So lesson learned. Now here's something else that I've noticed over the years was if this candle right here, and I went ahead and took this, but in the past I noticed that if the red candle's high is above this, it's the previous white candle or bullish candle, you probably want to stay away from it. I didn't do that. I went ahead and took it. What you're looking for ultimately is this one to be the high, and then this red candle, not have a high above this candle. And then you get in above that, down that break. So that's something for myself just to look at in the future and lessons learned. So I may come back. I'm going to pause it right now and see what happens. So, all right, so we're having a sell-off right now. And here is my confluences have lined up to go to the downside. The 20 moving average is the blue line. And we had that one white candle pullback, a bullish candle. And I actually got in up in here and sold short and made just a little bit. I took profit too quick, but I wanted to build some back, and I'm almost break even for the day. But here's what I want to point out is the CDV is bearish. The crossover here took place here. This is probably a good spot to get short below that low, even though it kind of contradicts what I said over here. So you just don't know. It's all risk tolerance and everything else. But here are some fair value gaps that I used. I've liked using these for targets, and here is one that the first one was this target right in between here. It came down, went right through it, and then you're going on this one. You would have been going right below this low into another fair value gap right here, and I don't see any more down here. So now here's one from like a few days ago, I believe, or overnight, last night. So this is a long push up, and this I would think that somewhere in here there's probably going to be a target. So anyway, those are just some things I'm looking at. So I'll come back a little bit. All right, I've been gone for a little while, and I've decided to pack it up this afternoon. And here's a trade that I could have taken is above this doji because everything was headed up except for this one. That's the only hadn't crossed over on a good note yet. Like right in here, probably would probably this one. I don't know. It's all it's all something you just got to make a judgment call at the time. But it was definitely bullish. And anyway, those are my trading notes for the day, and I am done. And I'll be back at it tomorrow. Hope you had a good trading day.